Hello friends, in the last video I had given a question. So let's go through the question and then we can have a detailed answer for the same. The question was, the following balances appeared in the books of Sandy on 1st March 2025. Cash book balance, bank balance debit 8500. Second is general ledgers. In general ledgers, we have sales account 89,000, purchase account 42,000, sales inward account 5,000, sales ledger Mr. D 4,000, Mr. N 3,000, Mr. P 2,500, and the next is purchase ledger Mr. J 18,000 and Mr. V 14,000. These are the balances as on 1st of March 2025. Now the transactions are given. During the month of March 2025, the following transactions took place. First is purchase of goods on credit from Mr. J 6,000, from Mr. V 26,000. Sale of goods on credit to Mr. D 5,000, to Mr. N 8,000. Transaction number 3. Goods returned by Mr. D 600. And transaction number 4. Payment received from Mr. N in full for the dues as on 1st March 2025. Here is the knack. It is written that payments received from Mr. N in full for the dues as on March 1st 2025 with a discount of 10%. Payments made by check to Mr. V 14,000. From the above, open the accounts that would appear in the books of Sandy. Now if you have solved the problem, you can go through it. If not, then understand whatever difficulties you have had. The first was, they have given balances of certain accounts as on 1st March 2025. The first is cash book balance, bank balance, debit 8500. Now we will prepare the ledger accounts. We will prepare the ledger first, ledger accounts of cash, sales account, purchase account, return inward account, Mr. D account, Mr. N account, Mr. P account, Mr. J account, Mr. V account. These are the ledgers to be prepared by us first. Now let's post the balances accordingly. Now tell me, over here it is written cash book balance, bank balance, debit 8500. So what would be the balance? In the bank ledger, it would come to balance brought down 8500. Correct? The next is given as sales ledger, sales account 89,000. Now sales account is by balance brought down 89,000. Always sales is a credit balance. Hence it is by balance brought down. Purchase is a debit balance. So purchase account 42,000. So you have to balance brought down 42,000. Next is sales ledger Mr. D 4,000. Mr. D 4,000. Mr. N 3,000. Mr. P 2,500. And here we have return inwards account. What do you mean by return inwards? The goods which we sell, if the party finds it in a faulty manner, or if there is any defect, or if we have sent any excess material, the said would be sent back, or if the materials are not as per their requirements, the materials would be sent back. So that is goods returned. So that is return inwards. So that will always be a debit balance. Now we have purchase ledger, we have sales we have posted. Now purchase. Sales, why have we taken all as debit balances? Because in sales, the party to whom we sell is always our debtors. We are always going to receive money from them. Understand? We are always going to receive money from them. Hence, they are always our debtors, and they are the sale entry what you pass. Firstly, let's understand what do you pass for a sale entry. XYZ, the party to whom you sold, that will be debited to sales. So hence the party is always a debit account and sales is always a credit account. So the parties are debited and they have their balance brought down in debit balances until unless they have given us advances, else their balance will be a debit balance. Now next is purchase. What is the journal entry for purchase? Then you can understand the balances. The journal entry for purchase is purchase account debit to party account. Party is the giver. It is always credited, and purchase is a nominal account. So it is in the debit side. Have you understood? Now let's go through the transactions. First transaction is purchase of goods on credit from Mr. J 6,000, from Mr. V 26,000. The most tricky part of this sum is posting of the balances. After that, it has no much tricks. It is a just simple plain sum. So if you have understood how to transfer the balances to the ledger accounts, the sum is very easy, very simple. Purchase of goods on credit from Mr. J 6,000, from Mr. V 26,000. So which are the ledgers being affected? One is the purchase ledger and the second is Mr. V and Mr. J. So first it will be from Mr. J 6,000 purchase and from Mr. V 26,000. Now in the books of Mr. J, you can find that by purchases 6,000, and in the books of Mr. V, you can find that by purchases 26,000. The next transaction is sale of goods on credit to Mr. D 5,000 and to Mr. N 8,000. So what is the journal entry? Mr. D account debit to sales 5,000 each and Mr. N account debit to sales 8,000 each. That is the journal entry. Now you can post it to the ledger. Mr. N and Mr. D, you can see two sales 8,000 and over here two sales 5,000. Excuse me. Next is goods returned by Mr. D rupees 600. So what will be the journal entry? Goods returned by Mr. D, it is 600 rupees. So return inwards account debit to Mr. D. Return inwards account debit to Mr. D. Mr. D is credited because in the personal account, credit the giver. So Mr. D is credited. Hence, by return inward 600. And why are we debiting return inward? Return inward is debited because it's an expenses to a company. Your sale is always an income to a company. Your purchase, your return inward is an expense to a company. In the nominal account, we have already read that debit all expenses and losses. Hence, this account is debited. So you have posted Mr. D account in return inward to Mr. D account 600 and in Mr. D account you have posted buy return inward 600. Have you understood? Now you can see payment received from Mr. N in full for the dues as on 1st of March 2025 with a discount of 10%. Now it is clearly stated that dues as on 1st of March was received by us, and on that a 10% discount was given to Mr. N. So what is the journal entry? Bank account debit to Mr. N 2700 rupees, because we have given a discount of 10% on the balances as on 1st of March 2025, which stands at 3000 rupees. And now discount is an expense to a company, hence we have written it as discount account debit to Mr. N. So in Mr. N it would come by discount allowed 300 rupees, and we have to create a new ledger called discount allowed. Over here to Mr. N 300 rupees. Are we clear? The next transaction is payments made by check to Mr. V 14,000. Now in Mr. V to bank 14,000 we have made, and now let's close the balances. Please go through the balances. Over here you will be confused that in bank how can there be a credit balance rather than being a debit balance. There can be always bank, we can have a debit balance, we can issue a check and that can be passed on a later date, and in the next month we can deposit the amount and then the check be cleared. That is, there are possibilities. So in that instance your books will be showing a negative balance until unless your balances are fulfilled in the bank. Please go through your answers and check your balances if it is reconciling with the same. Clear? Now let's discuss purchase day book. What do you mean by a purchase day book? What do you mean by a purchase day book? Any idea? Before reading my notes, think what can be a purchase day book. In this book, we record all credit purchases of goods. On receiving the goods and invoice, the stores department or the receiving department, whichever is there to receive the goods, compares the invoices and the goods received with the orders placed by the purchase department. On the basis of the invoice received from the supplier, necessary records are made in the purchase day book. In this book, we also mention the quantity per piece rate of the goods purchased. Are we clear? In this book, we maintain the quantity received and the rate per piece or per ton or per bale, whatever it is. For 1 unit of that material, we get the price. Here we have a specimen of a purchase day book. Please read it carefully. Clear? Now let's solve a problem. From the following particulars given below, write up the purchase daybook of Mrs. U.E. and Company, which deals in electric goods. Clear? On Jan 5th, purchased on credit from B and Company 10 electric iron at the rate 70 each, 5 electric stove at the rate 60 each. On Jan 19th, purchased on credit from Mr. C.C. and Company 30 electric heaters at rupees 2100 each, 20 electric kettles at 60 rupees each. 25th Jan, purchased from P and Company on credit 10 toasters at 120 each and 5 electrical heaters at the rate 60 each. On January 30th, purchased from BES on credit 20 electrical shavers at 200 each and 5 electrical fans at 400 each. Now let's solve the problem. Now you can see the first entry is Jan 5th, purchased on credit from B and Company 10 electrical iron at 70 each, 5 electrical stove at 60 each. So we have prepared the ledger format, purchase daybook format, date, particulars, inward invoice number, ledger folio, details in rupees and total. Now we write date, B and Company, 5 electric irons at the rate 70 each is equal to 700, 5 electrical stove at the rate 60 each. So 6 5s are 30, 300 rupees. So the total purchase from B and Company is 1000 rupees. Are we clear? The second is on Jan 19th. Mr. CC and Company, 30 electric heaters at the rate 100 each. So it's 3000 rupees. And 20 electrical kettles at 60 each. That is 1200 rupees. On Jan 25th, P and Company, 10 toasters at the rate 120 each and 5 electrical heaters at 60 each. So are we clear on this portion? Okay. And the last transaction is on 30th January. BES 20 electrical shavers at 200 each and 5 electrical fans at 400 each. So we have a total of 6000. So our total purchase daybook will be 12,700. Correct? Any confusion in this? Please do comment. Please go through my notes. And if you have any further questions, please do comment and share your thoughtful comments so that I could improve my videos. And if you like my videos, please share and please subscribe. Thank you.